Hey everyone, welcome to another video. So in this video, we'll try and understand how GST as a type of indirect tax has fared in the last 9 years since its implementation on 1st July 2017. So therefore, in this particular video, the objective is to understand what were the hits and what were the misses of GST in the last 9 years. And to conclude on a positive note, what could be the way forward and the proposals that could be put before the government in order to make GST a bit more better in the years to come. So as I said before, yesterday was 1st of July 2026 and therefore it marked the 9th anniversary of GST because it was launched in 2017, precisely on 1st July 2017. And when it was launched with the basic idea of getting it to a one nation, one tax. The idea or the underlying objective was to merge a lot of old taxes, a lot of old indirect taxes into one particular indirect tax called a nationwide tax called GST. Now, the government to a great extent was able to achieve this. But along with it came a lot of misses, a lot of disadvantages, a lot of issues, which we'll discuss in the later part of the video. But to start with a positive note, let us discuss the hits or the benefits that GST has brought out in the last 9 years. Now, before we move into that, to discuss some numbers or some statistics on how GST as a tax has transformed from 2017 or financial year 17-18 to financial year 25-26, just concluded financial year, let us draw some numbers and then understand the change. As far as number of taxpayers are concerned, in 17-18, in 2017, there were only around 65 lakh taxpayers of GST. In 25-26, there are more than 1.61 crore of taxpayers. So still proportionately, when you compare the population, all there, the number is extremely low. But okay, from 65 lakhs in 17-18 to 1.6 odd crores in 25-26 is the increase, or you can call it a substantial increase in the tax base when compared to what it was 9 years back. As far as annual revenue for the government is concerned, the average annual revenue for the government is concerned, in 17-18 it was 7.1 lakh crores and 25-26 more than 3 times, around 22.27 lakh crores. So there's a 3x jump as far as annual revenue is concerned for the government from 17-18 when you compare it with 25-26 financial year. As far as the monthly average collection is concerned, as far as the monthly average revenue of GST is concerned for the government, in 2017-18, the monthly average was hovering around less than 90,000 crores. While in 25-26 or up to 25-26, the monthly average revenue for the government as far as GST is concerned is around 1.84 lakh crore. So here there's not a substantial change because we're talking about average from 90,000 to 1.8 odd lakh crore rupees. But yes, annually, if you look at the collections, 3 times it has gone up as far as GST collections are concerned. And as we speak, the single highest collection in a particular month was in the month of April 2026, which clocked around 2.43 lakh crore of all India GST collections. So what are the hits or what are the points that GST was able to hit on in the last 9 years? Of course, there are many points, but we'll take 3 most important points that has transformed the indirect tax landscape through GST. One is the cascading effect of tax. To avoid tax on tax and double tax, of course, we'll discuss this in depth. GST is now thriving on a strong digital backbone. Right from the time of its formulation, 9 years back, it was paperless, it was digitized, and this is one of the strong factors of GST as an indirect tax, in India. GST 2.0 reforms. This came out in September 25, which was again a game changer as far as GST is concerned. It changed the landscape because multiple rates were standardized into two rates and some procedures were simplified and 2.0 reforms came into picture. The first point, of course, is elimination of the cascading effective tax. Now, this is the reason why the government had proposed GST way before 2017, and finally in 2017, 1st of July, GST came into picture to avoid cascading effect, the ill effect of cascading. Now, cascading, if I were to explain to you in simple words, it is nothing but tax on tax. A product or service that passes multiple stages and reaches the ultimate consumer or the buyer has already multiple taxes embedded in the price of the product. And therefore, this makes it very expensive for the consumer or the buyer to purchase a product or service. So the product passes from the manufacturer to the distributor to the retailer and then to the consumer, or from the service provider to the consumer. You have the implication of excise, VAT, and service tax. Excise for manufacturing, VAT for interstate sale, and service tax for supply of services. Now, all this added on to the cost or the base price of a particular product, which happened to be much lesser than the total taxes, thereby being more expensive for the consumer or the ultimate purchaser or the buyer. Moreover, these taxes could not be set off against each other. This is another problem. The excise duty charged on a particular product could not be set off against the VAT charged on the same product, or the VAT could not be set off against the service tax if the service is being delivered with the goods. So all these taxes, one, it was merged into something called as GST. Number two, because it was merged, there was GST only being implemented, therefore there was no tax on tax or double tax. And finally, GST could be set off against GST. The set off criteria became much simpler and easy to understand, and therefore the final price to the consumer reduced as a result. So elimination of cascading effective tax is the reason why GST came into picture and was able to knock off or tick off on the first day itself. The second one is speaking about the digital backbone, that is the GST network. Now, GST network is a government enterprise which takes care of the GST portal, it takes care of the e-way bill portal, it takes care of the e-invoicing portal, and recently the information management system which is on the GST portal. Now, this goods and services tax network is run very diligently, because of which you have better administration, paperless administration. Today, you talk about tax assessments, where it has become much easy for the taxpayer and even for the government, because it's a faceless routine right now. Tax assessments are very smooth, easy. There is no cash being involved in this particular, in the entire flow of correspondence between the taxpayer as well as the tax authorities. So the network, therefore, being strong from day one, GST could accommodate a lot of taxpayers. We spoke about 1.6 odd lakh crore taxpayers and all that. It could accommodate basically a lot of bandwidth because of a strong backbone in terms of the GST network. The third hit is the GST 2.2 reforms, which is the latest hit of GST. In 2025 September, GST 2.0 reforms came into picture, where on one side, a lot of GST rates were standardized into an 18% mostly for services and a 5% mostly for necessities of goods. The government still kept the 40% for sin goods or luxury items and all that. GST compensation cess was another item which got abolished in September 2025 with GST 2.0. This was an added headache for the taxpayer, because when you have to pay GST, you had a segregation between CGST, SGST, IGST, and compensation cess. So this was avoided with completely. GST registration process became much simple. You put out an application for registration, having the AI and all to help you get a registration application or a GST number in 3 days' time. You put out your papers for GST refund. Based on the accuracy of the papers being submitted and the profiling and all that, you get a refund back in very short number of days, and that to 90% refund Provisionally, you get it in your bank account, remaining 10% after thorough checking. So 2.0 paved way to easiness of compliance, to a lot of uh, confusion as far as GST rates are concerned, and reduce the prices of a lot of products, because from the standard 28% and 12%, it was reduced to 5%, and 18%, which seems to be still high, was standardized across all services. Talking about the misses, well, like any topic, you start talking about the topic, you have a lot of negative to say than positive. Same is the case with GST. In the last 9 years, yes, the government was able to fulfill its objective of one nation, one tax to a great extent, but it came with it a lot of disadvantages, a lot of misses. The single most benefit of GST, which is input tax credit, is in fact today one of the biggest problems in GST also. A plethora of notices being issued by the GST departments for frivolous issues. Exclusion of key sectors, a very controversial topic of discussion, because even after 9 years, from day one, even after 9 years, a lot of items like alcohol, petrol, diesel, crude oil, and all that has been left out of the purview of GST. Even from day one, there were discussions and debate. Till now, there's nothing progressing on this particular issue or topic. And then we have the latest GST Appellate Tribunal, which only recently came up, and therefore you have a lot of pending cases of GST in the last 8 years. The single biggest issue with GST right now is what is its advantage, and of course now the disadvantage of the biggest issue, that is GST input tax credit. Now, this is something that has become very difficult for the recipients or the buyers or the purchasers to avail the same through the returns. One, because you have numerous changes, numerous amendments. They'll bring out some change in Feb, then take it out in March. They'll bring out in April, then take it out in June, and stuff like that. 2B, 3B reconciliation has been a headache right from 2019 onwards. Okay, today a lot of it has been resolved through IMS, Information Management System, but still there is a need to do a heavy, diligent reconciliation between 2B data and 3B data if you want to accurately take ITC and avoid any kind of notices. There's one more provision, which is basically section 16, subsection 2, clause C, which is a draconian provision which says that if a seller is selling goods or services to the buyer, and if the buyer wants to take input tax credit for what he has purchased in terms of what he has paid as GST, the buyer can only take ITC if he ensures that the seller has paid GST for the sale or for the transaction or for the supply to the government. So you have a scenario where the buyer's responsibility is to ensure that the seller pays his tax to the government. So the government is making you responsible. And this is inside a particular section, which makes it, if you don't follow it, you become non-compliant to it. Of course, this is being debated. It is yet to be taken up by the Supreme Court, but a lot of high courts are debating around this. Hopefully some resolution around this comes, but as of now, it is the buyer's duty to follow up with the supplier, which becomes an added headache as far as ITC availment is concerned. Notices issued by tax authorities. Now in metro cities, especially Bangalore, Mumbai and all that, you have daily notices being issued by the department because they have to achieve some kind of target for the issue of notices. You have notices coming in for some reconciliation issues between GSTR 3B and 9, some routine matters, some data accuracy issues. It is important to note that already data is all available to the GST authorities through the returns. In spite of that, they are sending notices and all that, which for a business, it's an added headache, especially for a business which has pan-India operations across the country. Their finance department or litigation department they would be getting notices almost on a daily basis with respect to the business in each particular branch, each particular state. So this takes away a lot of This adds a lot of financial administration and compliance burden for MSMEs and even for big businesses having multiple places in multiple cities in India. The third one is exclusion of key sectors. Like I said, this is a controversial topic because we're talking about petrol and aviation turbine fuel, which and even alcohol, which is today kept outside the purview of GST. GST is not applicable on these items. Now, today we are in a scenario where the war and all is happening still, the signature is not being done between both the countries, and therefore crude prices are still showing an upward trend. And because of the increase in crude prices, this reflects into heavy prices per liter for the buyer or the consumer in India, because one, the crude price is high, so the base price will be high. Number two, on top of that, the state government and the central government will levy their own taxes because GST is not in picture. After levying of all taxes, including the base price and all that, finally when I buy a liter of fuel, be it petrol or aviation turbine fuel by airline companies, this amounts to a huge cost. So therefore, a lot of consumer groups are complaining, a lot of airline companies are complaining to somehow put ATF and petrol under the purview of GST so that at least the price will come down. What is the base price of the crude price cannot be controlled by India because it depends on the global scenario. But at least the taxes can be, that the state government and the central government levies can be eliminated and a single GST can be levied, therefore reducing the final price burden on the consumer. But this is not easy because we are living in a country of 29 states and the state governments will not allow this, because if they allow this, they will lose monthly, weekly, monthly, yearly revenue to a great extent. A lot of money will come down for them, and therefore they are, for 9 years, they were against this introduction of GST for these sectors, for these items, and they will continue doing so. There should be some consensus being achieved between the consumer groups as well as the state government as well as the central government in reduction of the prices or reduction of the taxes being levied on these products kept outside the purview of GST. Then we talk about delays in the functioning of GST Appellate Tribunal. Today, when a taxpayer gets a notice, he makes a response to the particular notice and response goes to the GST officer. If the GST officer passes an order which is not in favor of you, you prefer a first appeal. If the first appellate authority also passes an order which is not in favor of you, you go straight away to the High Court and then to the Supreme Court. Now, there was no middle person involved between the first appellate authority and the High Court till 2025. But in 2025, GST appellate tribunals were installed in almost all the states of the country and with the principal bench in Delhi to take care of the GST cases. Today, as we speak, 16,000 GST cases are pending before the GST Appellate Tribunal. And before this, there were a lot of pending cases and writ petitions filed before the High Court. So in a lot of high courts, you have cases pending for disposal. And on top of that, you have now 16,000 cases pending before the GST Appellate Tribunal. So they should do something. The tribunal should do something in order to dispose of these cases very quickly. And the High Court also should work with the tribunal in sending some cases, in balancing and sharing some cases between each other. Otherwise, for a case to come out of High Court and a ruling to be obtained is going to take some time. Well, it is very easy to speak about the hits and misses, but I'll not do justice to this particular topic and just end the video without discussing about conclusion and the way forward or the points to be put forward as a proposal to the government. Very soon we can expect GST 3.0, which will come into play, where some substantial amendments are expected. Some of the proposals, well, single GST rate has been the proposal from day one, but they at least have got it down to a standard two rates, 18% and 5%, but still 18% seems to be a bit high. So therefore, 12% GST is what is recommended, but this comes with a lot of issues, a lot of considerations that need to be kept in mind or kept to be in the working mechanism. But again, if you compare India with the remaining countries, yes, a single GST rate is suggested. Number one. Number two, you have some advance ruling authority and appellate authority for advance ruling and all that, which are basically in each state. Well, the idea of the government was to give a faster resolution to the taxpayer in a particular state. You file a, you ask the advance ruling authority, and the advance ruling authority will give you a ruling. Now, the issue was that for the same ratio, for the same facts, the ruling obtained from a advance authority of another state was completely different. And this added to the confusion for a third taxpayer, because in one state you get a favorable decision, a ruling, and in the second state for the same case, for the different taxpayer, you get a different ruling. So this adds to the confusion or adds to the complexity, and therefore with the smooth functioning of the GST appellate tribunal, once that is ensured, your authority for advance ruling and your advance authority for ruling and all that can be eliminated or be done away with. Multiple years notices. Well, today the trend of the department is to avoid time barring of sending notices and orders. They combine old years and new years and send a notice to the taxpayer. They'll combine 2019-20. 2019-20's notice levy or notice issue period is already lapsed, but they will combine it with a 2021 or 21-22 or 2023 notice and send 3-4 years together. There are a lot of high court decisions which says that this is not allowed, that the department will have to send one notice for one financial year and not more than that, and they'll have to strictly adhere to the timelines set apart in the GST law as far as issue of notices and orders are concerned. Two more proposals. One is with respect to the refund of accumulated credits. Now, if there's an accumulated credit for a business, let's say 1 lakh rupees, and tomorrow the business is winding up. Let's say the person is going abroad, he wants to wind up his business in a state, or he chooses to have a good retirement life and therefore wind up his business. If, especially in the case of a service business, he may have accumulated credit to 1 lakh rupees. Now, unless you are involved in the business, unless you are involved in the scheme of amalgamation, merger, demerger, and transfer out and all that, if a simple business is genuinely closing down and if you have some accumulated credits, as per today's provisions, you'll have to lapse it out or you'll have to let go of this 1 lakh rupees which you incurred. But the idea should be to refund this 1 lakh rupees to an extent possible for the genuine businesses who are closing down. For those who are merging, amalgamating, demerging and all that, you could also transfer the accumulated credits from one business to another. But for other businesses, single businesses which is just winding up for a genuine reason, the government should find a way to refund this accumulated ITC or credits to the business before it winds down. Avoid dependency on the seller. I was talking about section 16 subsection 2 clause C, which is a draconian provision as far as ensuring ITC availment is concerned. Check with the supplier whether he has paid tax to the department and all that. This should be done away with. It's against some provisions of the constitution and all that. Hopefully there's a Supreme Court ruling which says that this section should be struck out, because till today, because as of now, the section is present and makes the life of the recipients, of the buyers, of the consumers very difficult in order to fulfill that condition before availing any kind of ITC and reducing the payment of GST outflow to the government. Well, I hope I was able to make things clear in this particular video. If you like the video, you could show you could show support by hitting on the like button. If you want more videos of these on a regular basis through way of notifications, you could also think of hitting on the subscribe button. Till then, I'll see you guys in the next video. Take care and thank you.